now, any second now. There's like a 10-second delay. So I just gotta learn to time it. Alright, perfect. So, welcome everyone to another live trading session. Today is December 3rd, 2020, and we're back at again for the US dollar index. So, you can see, perfect. This is just perfect for us. For those that are in the paid side of things, a lot of our trades are in some nice profits because of the dollar index. And like I said, when the dollar index is trending and it's easy to follow, it makes trading so much easier. So let's go over everything. I think we'll have to go to the higher time frame to show you. Yeah. So our short-term target was this level right here, 91 flat, or just 91.000, and we met that yesterday. Now I did say if there was a chance for a reversal, it would most likely happen at this point, and not a full-on reversal, just a slight retracement, right? Like a retracement of maybe 20 to 30 points before we head lower. Because the long-term bias for us, for the dollar, is bearish, right? We believe by the end of the year, this is our long-term target of 88.72. And you can see the dollar index didn't even want to stall at this level. It broke it with two nice inverted hammers and completely shot down. And it's just perfect. It's beautiful, right? It's just, we're in a downtrend. We have so many fundamental factors weighing on the dollar. And yeah, we didn't even get that bounce yesterday, so that's perfect. Our ideal scenario was this price just breaks this level, which it did. We've been selling off pretty aggressively for a couple of days now. So, if the pullback happens, don't worry about it, because our last lower high is all the way up here. So between where we are now and all the way up here, a retracement is possible. And I mean, even if it's an aggressive retracement, I don't think it's going to be aggressive enough to clear this lower high. In that case, the downtrend is still intact. The daily looks fine. The weekly candle looks nice and bearish. Very nice weekly candle. I know we're only 3 days into the month, but the monthly candle looks nice and bearish as well. Very big candle. Hopefully we can close the bottom of this wick a bit and just continue our drop down to these lows down here. In terms of fundamentals, there's really nothing major today for the dollar. The ISM PMI came out right on a forecast, so no real difference there. Obviously, tomorrow is the main event, and that's the NFP results. Unemployment rate is expected to go down by 0.01%, but we're looking at around 138K less jobs. So we'll see if those forecasts hold true. It may be, if these numbers are bearish, we may reach, as low as this low by the end of Friday, if the NFP numbers are very bearish. Now, if they're bullish, I'm not going to say a full reversal will happen, but we may see that retracement I spoke of, right? The retracement, maybe back to 80, maybe back to 91 flats would be a good point. We can even go a bit higher, but I doubt we will clear that last lower low. So with that being said, if you're trading the majors and you're in profit before the NFP, please do the smart thing and take some profits off and move your stops to break even or profit. So at worst case scenario, if price jumps up, you get stopped at a break even. At best case scenario, if price continues to melt, then obviously you can get more profit. So that's pretty simple. When the dollar index is moving as simple and as predictive as it is, it's very easy, the analysis, and it makes everything else about your trading a lot easier as well. And so that is for today's dollar analysis. I'm going to be shifting the stream to the paid side of things now. So I'm going to pause it, then we'll talk about our trade setups that are in profit and what we're going to do once NFP rolls around. So give me 1 second.